Hello, this is Dale, and this is my month of March rack up, along with going over a weekly bull put that we put on March 25th that actually was a loser. We cut the loss at about that 3x point. And remember what we do on the exit is when the premium or the debit gets to be 3x what the premium was that we brought in. In other words, we brought in $1 credit. If it gets around $4, we want to exit. That's the area that we want to exit. It might be a little before, a little after, and that's not a hard stop. That's just an area that I know, hey, I have to do something, and it might be an exit. So we'll talk about that and what we did, and then we'll go over the March 25 rack up. I do these every month, so if you want to take a look at what I've done since I think I started this back in July of last year, see how this strategy works and see how I've been doing, I'd behoove you to go ahead into YouTube and go back and listen to some of the earlier rack ups that I had done. Well, you can see that this is a 1-year daily chart, and you can see how you know, when the market goes up, it comes back down, and sometimes we get you know, this was about a 10% correction, which happens all the time. It's about a 5% correction, and then currently we're having probably about close to a 15% correction. Whether it's going to continue on down, I have no idea. But this is a tough area to make a profit. So during this time, I saw very little credit spreads that I could put on, because it was like a falling knife, and then it came up a little bit and then it went down. So I was very cautious during this period, and these occur, you know, every once in a while. It's an area of caution, and it seems to work out well, that if I don't see a trade, I don't take it. Some of the quotes that I'd like to go over talking about patience in the marketplace is, you want to win more, stop forcing trades just to avoid missing out. This is a common goal or a common problem with a lot of retail investors. They have a feeling that they need to be in the market all the time. And there are times where you just need to stay out and let the market do its thing, and wait till it comes back to a more profitable or an even trading period. Second quote is that most traders don't derail their progress with one bad decision. It's usually a series of avoidable trades. So if you're writing down your trades in a journal, and you are following that, and when you see a trade, you execute it. You try to avoid the bad decisions. If you do make bad decisions, you remember it, you write it down, and you just don't make it again. Yeah, it's going to happen again and again and again, but you don't want to have a series of these avoidable trades. You don't want to get into that habit. Market, it's about what happens mentally and emotionally to a trader that gets into a bunch of bad decisions. They're wasting time recovering from avoidable losses. Means you're not focused on the next high quality setup. You're going too fast. You're focused that you're wasting time. You're in the market all the time, and you're wasting that time, and you're avoiding losses. You could avoid losses and wait for that next high quality setup. We don't need to guess. We don't need to chase. We just need to wait for the next positive confirmation. And that's what we were doing in the month of March. You can see that this is the trade that we put on and lost. This was the first one of the year that we had a losing trade. We're still well above in a profitable strategy for this for the year 2025. But this one was a loss, and let's just take a peek at what we did here. On March 25th, we went ahead and sold a bull put, and the reason I did that is you can see that we're going up on the railroad tracks, if I consider, and we made a little measured move right here. This looked like a good setup, and it was for a while, but then the next day it started tanking. And it started tanking when it came below this point here. I knew that it was time to watch, and I saw it go down to this point, and that's when I got out. We got in right here. We sold the 26 March 57.15 put and bought one 10 points away at the 57.05 for protection. And this looked pretty good. And look how far away we are the short strike to the current price. And that's the nice part about credit spreads. You've got a cushion in here, and if it goes against you, you've got a little bit of a cushion to to play around with, especially if you're going to exit the trade. Well, that's what we did. When we got around that, it was down around here, which was right around 12 o'clock on the next day. We bought that back. And the reason we bought that back is it had a net debit at that time of $3.50. That's just about at the 4x times the premium. Remember, you're always going to get the premium back. So if you go 4x times the 90 cents, that's $3.60, minus the 90 cents is going to give you $2.70 of profit. Of loss. So we brought in 90 cents, so we sold it for $3.50. We had a $2.60 loss, or $260 for one contract. $1,300 for 5, $2,600 for 10. Reminder: past performance is no guarantee of results. I wanted to present this to everybody to show, yeah, indeed, we do have losers. Nobody's perfect. It's being able to handle the losers. And especially with credit spreads, is to not let it go all the way down to the point where you're losing the 10 points that you have in the spread. Now, it's interesting because this came down, and then by the end of the day, it had pretty much came back up where you weren't losing too much if you let it go to expiration. I wouldn't let any trades that are on the wrong side. You had a crossover right here, and this was on the wrong side. It was time to get out, and I look for the best time to get out, and I did at $3.50, and that was a considerable loss, but not a catastrophic loss, and that's what you want to do with credit spreads. Our 2-day till expiration credit spreads have an edge. We've got about an 87% win rate. And the reason we have such a high win rate is we only place the trades when they're overbought or oversold. And this gives us an edge over the rest of the market that is looking at it's pretty much a random walk. Well, it isn't, because you can see it going up and down through these overbought and oversold regions. The second thing we look at is we always use a delta of 0.1 to put in our short strikes, and that means that 90% of the time these will expire out of the money, and that's the second edge that we have. These are the two key edges that gives us this high win rate. And now if we have a loser, if we can cut it short, we've got a profitable strategy, and that's indeed what we have. Let's take a look at the month of March. We only had 3 trades. And usually I average somewhere between 5 to 6 to 7 trades a month. The month of March was a tough one. A lot of volatility in the market. New president taking office. And he was, as soon as he started announcing these tariffs and all that kind of stuff, it became a tariff war, and the market was tanking. Tough period. But these periods happen all the time. So you've got to be on a system that knows how to handle these trades. Okay, so we had 2 wins. for $1,050 and one loss for $1,300. Okay, so he lost $250 for the month based on 5 contracts per trade. Year to date, however, we have had 13 wins and 1 loss. And so we are positive $4,925 based on 5 contracts per trade. This is down from last month, but only a small amount as our equity curve continues to go up. Remember, once again, past performances are no guarantee of future results. Now, every month I like to bring in the testimonials that people have sent me for the month, just a few of them. And the first one says, "Hi, Dale, just wanted to say that it's been a blessing to find you and learn your 2-day to expiration credit spread strategy. It has literally changed my life." Demian G, that's a pretty awesome email when you get something like that. Second one says, "Thanks, Dale. Great advice on the need to be patient." Now, every week on Tuesday, I do a recorded webinar, and I alerted my people well before this trade that this is a tough period and we have to be patient and wait for a good setup. And even if you got a good setup, you've got to be prepared to get out without taking a big loss. And this person, understood that and greatly appreciated it. And this last one, I get a kick out of it. Ken Z said, "Dale, you're a wizard. Thanks for another winning trade. Thanks for another winning trades, for a bunch of winning trades, I guess. Love being a member, and that is great. I love to get these testimonials. I love to share them with you to see that there are a lot of people taking advantage of this profitable strategy. So what I'd like you to do now is to join me. I release between 1 to 2 2-day to expiration credit spread trades per week. With that, I have an 87% win rate that I've been publicly releasing these alerts for about a little bit more than 3 years now, and I have over 87% win rate, which is unbelievable. So what I'd like you to do is join me at, if you go to www.optionsinfinity.com, there's 2 things you can do. One, you can order my workshop, which is 13 modules that teach you exactly what I do. The other is if this is something that you think you're going to like, is to join me and watch me as I trade the market. And I will send out an alert when I'm ready to get into the market. I'll tell you exactly why. A lot of people have found this to be very helpful. This is a very easy strategy. It's a very profitable strategy, but it takes some time to master. And most of the time, you need to maybe have a loss or 2. You need to maybe go through a losing streak, and you continue to exit. And when your equity curve continues to go up and up and up, that's when you want to start increasing your contracts. This is, what I consider the very best strategy for a retail investor to make consistent money in the market. I hope you've enjoyed this video, and if you'd like, go back onto my YouTube channel. Just type in Dale Brethauer, and you can go back in time and see some of my earlier videos on the monthly rack up. And this is the one for March. We'll talk to you later. Bye-bye now.